Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, July 13th. I am your host, Jesse Allen. Great to have you here with us once again. As always, MarketTalkAg.com is our home on the World Wide Web. The show today brought to you by our friends at Growmark FS. And you can find all of our streaming sources and everything on our website, MarketTalkAg.com. A lot to talk about in the market trade today. Let's bring in our friend Bill Biederman with agmarket.net. Bill, good afternoon to you, sir. And, overall, coming out of yesterday, the WASDE report, crop ratings, we seemingly have all that kind of factored into the market trade here. We're looking at weather now, kind of reverting back to that story. But just looking big picture at this market today, some good strength once again. What are your thoughts overall after that WASDE report?
Well, I thought the USDA, they made some very minor revisions to feed use and things like that, but very minor. I think what the trade did is they said, okay, all they did was factor in the acreage number, basically. And reality is, even the revisions they made in feed use, they aren't enough. Our ethanol usage is outpacing their number. Exports, there's no way. I mean, I guess there's always a way, and if you use USDA math, there's even a better way. But how are we going to go from exports this year of 2850, which are still probably need to be revised up to 29, all the way down to 25 for next year? I mean, let me put this in perspective. Last year, they started out at an export number of 2.150. Now we're at 2.850. They've revised it 700 million bushels. Don't you think that 2.5 would be kind of underestimating next year's demand? I mean, I'm assuming China's going to buy, and I'm assuming because I look at Chinese numbers a lot. So bottom line is, I think the trade is waking up to the idea that these numbers are, way off. These numbers have to be revised. And if we don't change yield and we just revise demand, we're looking at a 1 to 1.3. And if we change yield down from a 179.5, granted, that's 3 bushels above trend record. That's three bushels above the previous record, and it's 7 bushels above last year. So, I mean, it's hard for me to even comprehend them not lowering yield. So now you're looking at a billion bushel or less. The bull market, we needed to pause. We're probably going to trade sideways for a while, but by September, we expect USDA to start making some meaningful revisions, and that will be bullish.
Well, and you talk about those revisions and you look at yields, and we think about it. We looked at yesterday's crop ratings, really no change. Corn overall was up a percentage point, even though there were some reductions elsewhere. But, I mean, I would say roughly a quarter of our nation's corn acres are facing some serious weather challenges, especially those northwestern plains. I mean, it's something where we were talking about this before we jumped on air. I mean, yields, we don't get some rain in some areas here soon. It's going to be a rough go. And some of the areas that were dry, we just got some rain to buy us a little bit of time right now.
Yeah, we have a large entity we work with up in North Dakota. We work with a lot of people up there. But anyway, this one had a meeting with the agronomist today, and that they basically told them, quit spraying. By the end of next week, if the forecast is right, there won't be a crop. Now, the market has known about all these problems all year when it comes to spring wheat and never really got onto it hard until yesterday, because somebody woke up and said, oh my God, it's not just North Dakota, it's all of Canada. And it's the same thing in the soybeans when you look at canola and any grain production at all. So, I mean, it's not just North Dakota. It's the 3 states we have in the United States, plus the whole Canadian, you know,
Mm-hmm.
growing areas. So this is a big deal, Jesse. I mean, I'm not super bullish when you get up over $5. I'm less bullish when you get over $6. I'm like, holy cow, this is really a great price from 7 on up to 8. And anything over 8, I'm going to be looking at probably selling 2 years crops because I know the world will respond. But I am not bearish. I do not think, even if we trade below $5, it'll be for a very minor time period.
Well, when we think about it, we tested some of those support levels here before the report, and now we've kind of broke back above some of those key levels there. You mentioned, $5. We tested that, tried to test that a little bit, but we got back up above, that 5.30 mark in December corn, and I agree with you. I'm not bearish. I'm definitely neutral to bullish on this crop, and overall corridor beans. I'm very interested to see how this forecast sets up here the next couple of weeks with the hot and dry weather. We're going into pollination, and I mean, like you said, there's some areas where if we don't get some moisture, we're not going to have a great crop. And you hear scattered reports, Bill, of folks saying that their crop's looking really good. We don't know what people are talking about, but overall, things are kind of bleak in many areas of that northwestern corn belt.
Right, but we do have a lot of good areas, and I think the difference between this week and 2 weeks ago is that 2 weeks ago we were worried about some pretty catastrophic consequences of weather in Iowa, key state. 50% of the state of Iowa, Minnesota, South Dakota. Well, South Dakota and most of Iowa got pretty well bailed out here this last week. They're supposed to get bailed out in the balance of that dry area by this Thursday. So now if that rain misses, that will change things a little bit more friendly. But, let me just, I think we got a good crop is what I'm saying. We don't have the instability that we had a couple of weeks ago, but let's go back and look at the numbers. If we have a 179 yield, which is what is in the balance sheet, and we got a 1.4 carryover, revise the demand up here at 1.3. If you lower that to just 170, to the old record, 176.5, you're down to a 980 carryover. And if we lower that, because I don't know what numerically we're really at, I don't think we're going to be above the previous record, but let's just say you take it to last year's yield, 172. You're down to a carryover of 600. So numerically, here's we all know what happened to the May contracted expiration. We all know what happened to the July contracted expiration. You can go back and look at the articles we wrote a month and a half ago that we expected the July contract to go crazy into expiration more than the May. And we actually referred back to the Ferruzzi squeeze saying that looks like small compared to what we could be looking at this year. That holds true. So when we go into soybean August expirations or September corn expirations, if we're looking at a sub 176 yield, the numbers don't work. And the demand is going to be forced back to the United States by September 1st because Brazil will quit shipping corn during the month of August. So everybody will have to come to the United States. That could be a huge slug of demand wanting to load out when farmers go sub 175 yield. I'm not selling it this cheap. And you could have, look at the July, how it traded today. It was up 80 cents.
Mm-hmm.
It was up because the seller said, I'm not selling this thing this cheap. And the buyer had no choice because the buyer, number one, can't find corn to buy. And you can't go out and buy corn at $1.60 over so that you can make delivery at zero board price. So he had no choice but to pay up. And that will be the cash market situation if these yields are really in the 175 or less. So it'll be interesting to see where we establish value. But we have value right now, I'd say between $5 and $6. That's our value. And more specifically, 514 to the gap at 570.
I'm glad you brought up that squeeze in the July corn contract too, Bill, because I think a lot of producers who maybe know enough to be dangerous in the market but don't know everything probably saw that today, saw us up 80 cents at one point and went, what is going on in that July contract? And, you kind of explained it there, but, I love a little more. You could expand a little more on that, just what we saw there today with that July contract and people being caught in that squeeze.
Yeah. So like as a seller, you have two choices on a way to get out of a contract that's in expiration. And you have to be out by the last trading day, or you have to deliver those bushels as you're obligated to do. Well, you can't buy corn. So I think today's price was $1.60 over at the river, and that's where we trade deliveries. So you would have had to pay $1.60 over, plus you would have to pay elevation fees and all kinds of things. So probably about $1.90 over. And I'm talking about $1.90 over the September futures. Okay. And September futures are at 533. So, that's $7.40 value. Well, today's high, the market went from 664 today all the way up to 750, right against that delivery value I just explained, because the seller knew that if he didn't pay to get out of the futures, he would have to go through that process I just described at the river, paying $1.60 over plus different fees. And he's just said, I'll pay $7.50 and get out. And that's exactly where this whole market sits from here on out, going through. If we don't have a really good 176 record crop or more, everybody who's short these futures are going to be faced with that question. How am I going to either buy out of these futures or deliver? It's just like the farmer who sold corn. Unfortunately, we know farmers up in North Dakota that have sold corn, and if we get this weather forecast, they won't have a yield. So what do? You can't deliver. You can't go out and buy it. So that leaves you with, this sounds like a storybook, with, you can't go out and buy it. So you just got to go to your elevator and buy out. And he's going to want the market difference plus probably a fee. You don't want to get caught in that.
No, you definitely don't want to get caught in that. And a great explanation. And I think that's something that a lot of folks, especially like you mentioned, North Dakota, that Northwestern belt, we're going to be watching a lot of this moving forward. And it just, I think that all comes back to where our markets are at in today's world and the volatility that's there and all these factors that are playing in. It's really, it's made for an interesting game, so to speak. I mean, it just seems like the stakes are that much higher with all the money flow we see in this market and everything else, Bill.
Yeah. Can you imagine one more thing, Jesse? If let's just say, the attitude of the whole marketplace has gone neutral to complacent in the last few weeks, and for good reasons. The buyers are pretty well bought. They're bought out ahead. We had a massive improvement in the weather. Everybody's on the sideline. The buyer's on the sideline. The farmer's on the sideline. Everybody's waiting. So the market has, from a standpoint of, let's just say you're China, you're going, well, the USDA is not going to do anything till earliest would be the August report, maybe September. So we've got a window here where we could sit back too. And the longer we sit back, the more the market feels comfortable selling off. And so we'll buy all of our stuff cheaper. So everybody's got that mentality. But can you imagine if that mentality changed and we went back to saying, oh my God, I better hurry up and get it bought. Or I'm the farmer that can't deliver. I better get this stuff bought back today because I don't want it to go up. And we change that attitude, and the funds see the response on the chart and they start buying. They've reduced their positions dramatically, and they have room now to buy like 3 times the volume that they currently have on the books with the new rules, So it would be very crazy if that happened. Now I don't want to give everybody the impression that I'm just this wildly bullish person. I'm not. I'm just saying these markets are so volatile that you have to know what the chess game is, and you have to anticipate that whatever would have been a typical move, times that by 3. And that's the kind of move you can get. I had stops in these markets. This is how volatile it is. I had stops in to protect equity. The market blew through those stops. And if it passes your price by 5 cents, you don't get filled. So you wake up in the morning going, I don't have a worry to worry about because I had stops in protecting my equity. You come into the office and the market's, 40-cent move limit, and you realize you didn't get filled on those stops. That's a stressful day. So my point is this volatility between now and I think next spring, with the fund's ability to put on huge positions, big limits, I don't think this volatility is going away. Not for a while.
I would agree with you on that 100% there, Bill. I know as well we got some inflation data out this morning, and we saw the dollar pushing a little higher as well. Some of those outside markets, we're always watching those. Any thoughts on some of that inflation data or what we're seeing in the outside markets today?
Well, yeah, but could you tell me what that inflation number was? I didn't see it.
I would have to look and see what it was.
I can tell you while you're looking that up that there was a survey done. I think it was Yale or somebody did a survey of different economists, and the average guess for the fourth quarter is 3.7%, led by food and fuel.
I am looking for it. I'm not seeing it. The VIX is trading near 16. Dollar index pushed above 92.7. Yields on 10-year treasuries, recent range 1.36%. That's the only numbers I have in front of me. And looking like we lost Bill there momentarily. We'll keep rolling here on the show, and I apologize. We lost Bill here for a moment and trying to find that inflation data here for us today. But again, talking with Bill Biederman of agmarket.net here on the show. And I'm your host, Jesse Allen. You can find us at markettalkag.com as well. That's our home on the World Wide Web, markettalkag.com. You can find us as well. Facebook, Twitter, Instagram. It is all at Market Talk Ag. And our great affiliates, our radio affiliates, you can find them everywhere, as well as all of our great sponsors, including our friends at Growmark FS, for being a part of the program here. And again, we'll try to reconnect with Bill Biederman momentarily. But again, we were talking inflation data. We know we got some of that out here today. That's got a little bit of debate going on Wall Street over whether it's transitory or more perpetual. But overall, the gray markets today, just kind of the impact on that. More so, it's weather that's the story in the gray markets that we're watching. And we got a lot of things to consider moving forward. And as Bill mentioned, a lot of volatility could very well remain possible here moving forward in this market trade. Again, apologize, a little technical difficulty there right as we were talking with Bill Biederman of agmarket.net and trying to reconnect with him here momentarily. And we'll see if we can get him back on the program here as we're working to do that behind the scenes. And here's the fun part of the show. I'm the only one doing the producing on my end here. So it always makes it kind of fun when things like this happen. Technology sometimes is just it's just an interesting animal. As there's we got Bill back. Technology.
Yeah, how about it? I don't know where you got cut off, but we were talking about inflation and
we were right at the beginning of that, and I was mentioning the couple numbers that I found there, Bill, and the only thing I found in front of me was the VIX is near 16.
Oh, yeah.
And yields on the 10-year treasuries remain constrained to like that 1.36 recent range. That's the numbers I found, Bill.
Well, the annual inflation rate came out to 5.4% in the month of June. That's the biggest level since August of 2008. When, of course, the feds were doing everything they could to inflate the economy. See, here's what happens. When your economy is sagging, like it has been, of course, every time there's a threat of COVID shutdown, everybody is running for cover. We need the inflation to give people confidence to go out and remortgage that house and take all that money and buy more cars and buy more siding to redo their house, that kind of stuff. And then those people are making money. So then those car dealers can hire more people. You get the whole gist of it, Without that inflation factor, you have the risk of running into stag or deflation. And that is a hole you don't want to be in. especially if it's led by income loss, which it was a year ago. That's why they got to get this turned around. So, you saw the Fed this week, and this was kind of the smoke signal. This week, the Feds completely reversed what they said. They said, well, we're going to raise rates eventually, but right now, we just want to make sure that everybody knows that if the economy's struggling, we're going to remain accommodative. And there's a reason they're giving us this message. Like, I was going to sell bonds to lock in these cheap rates. And I did sell the bonds, but I quickly scratched the trade because I got to thinking everybody was getting scared about COVID again about a week ago. And I said, bonds could rally, rates could go right back down. They're going to not rally rates, they're going to increase rates as long as there's this threat.
Very, very true. Well, Bill, I know a lot of things in the market trade here today, and I always appreciate your insight. And I know if folks need a little advice, need a little help, you and the team at agmarket.net, you guys have a lot of great resources, the website, a phone call, the app, so many ways to connect and get a little advice, can't they?
Yeah, and we welcome those phone calls. I mean, there's a lot of people that are searching for some advice, and our advice isn't great. I mean, nobody's is great, but I think ours is high quality for the industry. So, give us a call, give us a shout, and we'll try to help you out.
And you can find all that information at agmarket.net. Download their app in the App Store as well. Bill Biederman, appreciate the time as always. Thanks for joining us on this Tuesday. We'll see you again soon.
You bet.
Bill Biederman with agmarket.net joining us today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Tuesday, July 13th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.